Okay, everybody, good morning. Happy Wednesday to you. To all my European friends out there, or Australian, or even American, or anybody else outside the Anglophone world who might want to listen or watch this, welcome. Going to do some more Bitcoin metrics today. Also want to continue on what I talked about yesterday, this new metric of looking at the daily change in the power trend. It's kind of interesting. So let's get started here. The theme of this morning's show is going to be volatility. Okay. You probably don't follow the headlines of the Ukraine war as much as I do. I'll get to that a little bit later, but to me, it's not ending anytime soon. Have comments from the supreme leader in Iran that deals with Trump aren't going to happen anytime soon, and we'll see what Israel does with that. We have obviously that war ongoing, and question marks looming all over Asian trade and perhaps conflicts as well. So as we continue on here, although I actually genuinely believe that the Trump admin wants peace, deterrence doesn't seem to be their strongest strength, in my view. So let's go back, actually, and look at, this is the market cap of Bitcoin. We got the old power curve going through it beautifully. Okay, 96% R squared, same as the price. We're at a $2 trillion asset right now, okay? And by the way, congratulations, going over 108,000, I guess yesterday, overnight for America, today, Europe, and now dropping back down to 106,000 or something at the moment, 106.4. Anyway, let's go back here to, this long crypto winter, it was called, finally going above the power curve. This is the all-time power curve, so this power curve didn't exist at the time. But going above this curve in, early mid 2017, starting the year at $1,000. This is $1,000 Bitcoin. All right here. What's the market cap at $1,000 Bitcoin when the coin supply is roughly 15, 16 million, 15, 16 billion. Okay. Trump comes in here. First time. We do the first. Not the first, but we do a mega bull run this year. Okay, started the year at 1,000, finished the year at 20,000. What does that mean in market cap? 300 billion. It's big, certainly big. Any unicorn CEO would be happy with this, but this was not on the radar of anybody during this time, to be honest. All right, Bloomberg, of course, was picking it up after denigrating it for weeks and months and years. How many Bitcoin obituaries were written during this period, during the crypto winter, so on and so forth. But from this year, which was really Trump's first year, I think, for those of us in the space, those of us that were looking at the scaling debate, which of course was resolved in August, and then finally November 2017 with the failure of SegWit 2X. This was really not on the mainstream's radar. And then, of course, we went into another bear, and it was more excuses for the mainstream to write off Bitcoin, to declare it dead, and more obituaries. That's not the case now. Okay. Now, after a full nother cycle, a full nother bull run, 2 more halvings, we are rising up again to the trend line. And actually, interesting, the market cap is not at trend. Remember, price is over trend, but not the market cap. Okay, so just 2 different ways to look at it. Price is better. Price is the most direct way to look at this, but nonetheless, this is the market cap. We're over 2 trillion right now. And, who knows what this market cap could be by the end of the year. It could be 4. It could be $4 trillion, greater than any company in the world. Again, it's not a stock. As I always say, Bitcoin is not a stock, but it could be greater than any company. So that's going to make way more headlines, and it's already making headlines. But On top of that, on top of all the turmoil, I don't want to make it all about the United States here, but obviously the hegemon in the Western Hemisphere, a lot of things happening. And theoretically, we have some tailwinds for Bitcoin with the crypto or Bitcoin friendly Trump admin. But there's so much anger on the left and there's so much divisiveness that crypto is going to continue to have a very negative connotation because of Trump coin and Melania coin and the meme coins and certainly the grift that is happening and will happen. And like I said, I think that's going to be part of the next bear is when this stuff gets flushed out in some, I don't want to say, that it definitely will happen, but this is going to be on the agenda if and when, if they even have elections, by the way, at the midterms, but if they do and the Democrats take power, this is going to be in the crosshairs. Not that they're going to, completely obviously destroy Bitcoin. They cannot do that, but it's going to be in the crosshairs. It's ripe for fodder for bringing in a new bear in Bitcoin in a couple years. But my point is, at these lofty valuations of the Bitcoin network, which are totally justified, but as we know, they extend well above the trend, right? In a bull, okay? At least 4, 5, 6 times the trend. Although, to be fair, remember, I said 2 to 3 times the trend is my target. And the trend's going to be about 150,000 by the end of the year price. So 2 times that. Sorry, 125,000, I think, is the trend. So 2 times that, 250, maybe up to 350K. Regardless, this is big, big money. I mean, this is big casino money. And it's something to be prepared for. I think it's coming. I'm over here in Eastern Europe and the Baltics. We're worried about a lot more than just volatility in any market. And so we're trying to prepare for that as well. But it's coming. The volatility is coming. So I just want to say that. It's something to prepare for. Hi, Cici. Hi, Sandro. So I say Cici or Sandro? Cici Sandro. Says, I completely agree on Russia's war continuing for quite a while. Yes, BTC will cheer us up. Thank you. I just feel for the Ukrainians. This is definitely up to Europe to deter Russia, and everybody still has their head in the sand, except for Eastern Europe, in my view. But we'll get to that. So anyway, the point is, this is just way more volatile. Remember, Trump was in here in 2017, and no one was even talking about it. Of course, there's way more important things on people's mind. And when you do talk crypto or Bitcoin in the news, it's always about some scam or some grift. And now the president is part of that. This is going to be a wild, wild ride. Okay. Other reason I wanted to show market cap to start out this video is clearly it's the power trend. Bitcoin has proportional growth to time. It has proportional growth to addresses, proportional growth to hash rate, proportional growth to adoption or price. Here's exponential growth, which is constant. I've shown this many times. No way. No way Bitcoin is doing this. It's just not how the system grows. All right, let's zoom in to early Bitcoin days. Your exponential line, number 2, on the market cap, just remember, exponential is simply constant growth. It's a straight line on log scale. It doesn't work. It doesn't fit the data. Power curve fits the data. We're at 96% on power, only 85% on exponential. And then we just fly off the rails if you try to graph Bitcoin exponentially compared to power. So again, let's just pull it out to where we think maybe the top could be, start of next year, end of this year. $3 trillion market cap if we graph it according to power growth. $23 trillion market cap if we graph it exponentially. See yesterday's video, see other videos. I just don't believe. And the data tells us that this sort of worldwide collapse, though it might be great for Bitcoin holders, it's not going to be great for anybody else. that hyper Bitcoinization idea, it doesn't play out that way. This is longer. This is more, this is a much deeper issue of trying to take over the world's financial system. And a hyper Bitcoinization idea is, again, I'm not going to complain if it happens, but it's overly optimistic in my view, and it's just not grounded in reality. And certainly the constant growth of an exponential trend is not there for Bitcoin. Okay, that's again. I don't know, but I hope that you enjoy it. Hope it can be relaxing for you. Thank you. One more on this, on the market cap. Here's the power trend. Here's the stock to flow. If we graph that, remember, stock to flow is a power curve, but it's a ham-fisted way. This way is more accurate. I'm updating this every day, and so it does kind of fall down eventually to look something like the power curve, but these stair steps will always be higher until the data comes in. So it's not predictive. It's not predictive at all. I need to do another video on this, but if you looked at, say, the power curve here, sorry, the S2F stock to flow predictions here in 2017, they'd be way higher than they turned out to be here. Okay. This looks better because I have all the data and it falls down. The power curve doesn't look like that. It's different. Power curve actually gets that trajectory right in the past, as well as, moving on into the present. So if we looked at, I need to do another comparison of this to explain that better, but power curves look great from 2016. S2F, specifically the way that model has been revised many times, it doesn't work that way. Just another point of clarification. Bitcoin is definitely power. It's not exponential. We get to just insane things. By the end of the decade, $1 quadrillion Bitcoin market cap. Great. It's going to be better than the United States' financial system, which is less than $1 quadrillion. Great. It's not happening. Prepare, at least hope for the best, but plan for the worst, or plan for reality. That's how we look at it. Okay. This is market cap. Let's look at this one now. Still a market cap based trend. All right. The old price to sales. This is one I've had on my old website since 2017. I don't have this graph up on my website now, but I will get it there soon. We're going to look at the left-hand axis, which is market cap and miner revenue first. All right. Put it on log scale. Look at that. I got miner revenue and the Bitcoin market cap up here, okay? Notice how huge miner revenue looks on log compared to the dark green. Notice how huge the dark green looks on log. But if I put it back to linear, you can barely see it. Think about that. Anyway, let's do it. Now I got to take these off because my software works that way just now. All right, so This is how we can create a multiple of real miner extraction of the Bitcoin network and see how that relates to the market valuation, market cap. All right, so 2017, we were at, again, $300 billion market cap. How much were miners pulling in on a trailing 12-month basis in block rewards and fees in dollar terms? $2.5 billion. All right, so we're over 100x on the ratio. I'll show you the ratio in a second. 2021, $1 trillion market cap, not even 10 billion. Not even 10 billion in miner revenue. Okay, then we go till today, $2 trillion market cap, 13 billion. Miner revenue on a gradual trailing 12-month plan for your business expense basis is really low, actually. It's a very competitive industry. It's very difficult to be a miner. Let's put the ratio on now. There it is. Okay, so right-hand axis, PSR. All right, so here's that 100x in 2017, 111x top, 2021, 168x, and now 154x. But again, this grows. It's just the nature of Bitcoin with the way that the power curve works and adoption. This grows itself. This actually itself is a power curve. So I'm going to put some bounds on this, and we'll put this on log scale, make it a little bit more understandable. This in itself grows like a power. You see, it's a kind of gradual increase in the growth rate of this thing, but not as fast each day as it was the day before. This is pretty decent on market tops. Okay, so I did it twice in 2012, 2013. Did it in 2017. All right. It's very hot, gets over 100x here. Very hot. What does very hot mean? It's on a 98th percentile basis, over 175. Sorry, over, it did hit it, about 170x, something like that. Got close, maybe it kissed it. And then here, we can see we're not there yet. On log scale, we can see we got some room to grow. Okay. The 90th percentile, presuming we can hit it again, is close to 300x. That means the valuation of the Bitcoin network when we were at the most insane part of the bull market, grandma is telling her family to invest in Bitcoin 300 times sales. All right. That's why I call it the price to sales ratio. This is before expenses that miners have. But if miners are only investing in Bitcoin, and of course there's merge mining and miners do other things. But as far as the Bitcoin network is concerned, on a mathematical number, it's only throwing off $13.5 billion in real extraction on a trailing 12-month basis. $13.5 billion compared to a $2 trillion market cap. It's very competitive. That multiple, by the way, is way higher than gold or oil even. Oil, I don't even know how to do a market cap on all the oil in the world, but with gold, roughly, it's just super rough numbers. Like with gold, you have, let's just say $20 trillion in gold in the world right now. And the global miner revenue of gold miners is a couple $100 billion. So it's the ratio just is not, it's not as high. Let me just do that really quick. Just to, if I say it was 20 trillion divided by 0.2. Yeah. Well, it could get up there. Yeah, it could get up to 100. Could get up to 100, let's say, in the gold industry. All right. That is price to sales. That is the market valuation of the system that they're interacting with. The market cap, the market value of all that gold in the ground that they end up selling. The ratio is something like 100x. It means they sell a couple $100 billion worth of gold every year into the market. The market itself is worth 100 times that. Okay, so Bitcoin is already higher than that. Started to breach that, in 2017, certainly 2021, and it can dip way down. Look at that. Look at that when it's marking that low there. Look at that. It falls all the way to 10x. Again, volatility. Volatility is the name of this show today. Prepare for it, because I see no reason why these things wouldn't repeat. All right, so you go from having over 100x price to sales of the Bitcoin network in 2017, falling all the way to 10. I'm looking at the black line there, the price to sales ratio in the tooltip, 9.2x. Massive changes can happen in this market over the course of a year or a month. So I think this is a good benchmark. It connects the theoretical market value of Bitcoin with the real hard capex driven, entrepreneurial driven, electricity capex chip mining business of Bitcoin. This connects those two things: theoretical value of the Bitcoin network with the hard selling of hash power to the Bitcoin network. It's a big multiple, 150x at the moment, and presumably you can't predict a price from this number, but we can predict a range of a theoretical overheated number. We could get up to 300x by the end of this year. Okay? And then again, like I said at the top of the video, I think we could fall right back down to look at that two percentile on the bottom. You know, a year after that, maybe we're down to 30x. You got to be prepared to stomach this stuff as we grow into this network. Thank you, sir, from Finland. Or ma'am. Sim grade, sim racing products. Thank you for the kind words and solidarity. All right. We got power. Bitcoin is power. It's proportionate. It's not constant. It's proportionate to time as it grows. Okay. So approximately every 12.7 increase in the days of the Bitcoin network, the market cap or the price will double. That's how it works. The Bitcoin power curve. You can see more of that on my website. Let's go back to this from yesterday. This is a new one. This is changes in the Bitcoin price per day, compared with changes in like the smooth scientific statistical calculation of the power curve. So as that black line grows, we can also measure the different frequencies. I'm doing daily, monthly, and yearly of this black line itself. And as Giovanni pointed out yesterday, I saw, these are, of course, also power curves with a little bit lower powers or exponents in the formula. Bitcoin is close to 6, 5.8 in the power curve, and these are going to be lower. All right, so I want to do a couple more things here as I talked about this. Let's take off the monthly. Let's take off the trend itself. Okay, now we're looking at the right-hand axis for the price change. Actually, I realized yesterday, sometimes when I start talking about these things, you can't see things. So here you go, without my ugly mug. Price change is this axis. This is the change in price on the right axis. Okay. Here we have daily and yearly, okay, as they grow. Let's put the actual to, this is going to be our valuation, okay? And remember, see more on yesterday's video if you want to really deep dive into this. The gaps here in these green lines are when the change, of course, is negative. Price is falling per day, so there's going to be gaps because you can't put a negative on log scale. And anyway, expect that. Obviously, like I said, 100% R squared statistical phenomenon only happens in, a vacuum. Doesn't happen in reality. So of course the price is not going to go up according to this power trend smoothly every day. But the idea here is as we move well above the day line, which is number 1, as the actual daily change, and you can see that a lot of times it is well above the daily, but I mean close to the red line, like well above, that starts to signify, some overheating. So it happened here, happened here, happened here, and it happened here. Okay? I gotta hold the mouse because I know that it's hard to watch sometimes. There we go. Happened there. first takeaway again, and I just want to be clear because sometimes I mix things when I'm speaking on the fly here. We see that this happened once. It was February 8th, wasn't it? Happened once in the last bull. Okay, so it didn't really exactly pick the top, but it was definitely flashing, warning. February 8th, 2021, the actual daily price change was 7 grand. Okay, so Bitcoin was 39 grand, went up to 46 grand in a day. That's where the daily change equals the yearly change. Okay, so Bitcoin is pulling value from the future. It's overheating. It's performing very well. And then so the first question is let's see if we presume that it's going to hit that at least one day at the end of this year, because of the 4-year bull. Remember, if we hit that at least just one day, looking at the trend daily should be only about $117 a normal daily change. But as we can see, based on the history, based on this green line, which is noisy, but you see what I mean here, it should at least kiss this red line, or could. Of course, should is not the right word. It could kiss this red line at least once. End of next year, start of this year, something like $35,000, $36,000 daily change. Again, imagine the volatility. Imagine the Bloomberg headlines, the Yahoo Finance headlines, the media going crazy, Trump tweeting about it. I mean, it's just going to be nuts. Prepare yourself for that. And then prepare yourself for the next day when it drops 40,000. Volatility is going to be off the charts. The other thing to keep in mind, and this is again academic, but it's interesting, is the daily action here, when we were equaling yearly action, right? The actual daily action was equaling the trend yearly action. So in November 2013, $120 on the day was really something like a yearly change. Let me put myself back on just to like talking with my hands here. $120, I just lost it, didn't I? $120 on the day is greater than the yearly trend. It's a big number. When would then the trend line be $100? Okay, and as you can see there, the trend is rounding to zero back in 2013, the daily trend. So when would the trend line go to that is the line number 1? When does that equal $100? Okay, and we know because right now we're around it. What's the trend? Number 1. I'm looking at number 1 here on this chart. The trend daily 96. It's around today. We'll get to 120. Actually, the start of next year. So something like 12, 13 years. 12, 13 years. So this daily price action, as Bitcoin was screaming to that first time all-time high over $1,000, we were pulling from the future price action that would be expected to happen 12 to 13 years later. 12 to 13 years later. So it's a very interesting thing to think about. And I think turn the analogy of hyper-Bitcoinization on its head. Some people say, oh, you haven't seen nothing yet. Hyper-Bitcoinization is coming. Everybody in the world is going to buy it. It's going to be face-melting gains, all that. I'm going to sell you my newsletter as well, by the way. not me. I'm paraphrasing, obviously. Turn that analogy on its head and say, what is it actually doing? It's actually already giving you face-ripping gains right here that are 12 to 13 years ahead of its time. $125 gain in the actual Bitcoin price in 2013 was equivalent to what the power trend would project. And again, the power trend is the best thing that we have for sure in showing the adoption of the Bitcoin network. That was going to happen 12 to 13 years later. So turn the analogy of hyper-Bitcoinization on its head. We've already had this type of action, and it's going to get more crazy, actually. Even though you think that the power curve is like less exciting as it sort of has this declining asymptotic return. And indeed, the compound growth does shrink a little. Remember, we're at 42% right now. We're going to shrink down eventually by 2070 to 10% trailing 12 month. But that doesn't mean that the numbers aren't astronomical and certainly better than anything in the stock market or bond market or anywhere else. So let's do it. I think I spoke this wrong yesterday. Let's do this for 2017 and 2021. 2017, the daily move, $1,400, actual daily. All right, something like $1,500, even $2,000. Let's call it $1,500. Split the difference of a couple other days. $1,500 in 2017. Let's see when the daily, that's number one now, I'm focusing on number one, reaches $1,500. 2038. And I think my math was again wrong. That's 20 years. All right, so we increased from 2012. We were pulling, quote, only 12 years from the future. In 2017, we were pulling 20 years from the future expected daily gains. That is astronomically large. Like, ask yourself, now put that bet, turn it on its head, turn the hyper-Bitcoinization idea on its head. That is a astronomically large gain compared to what the network has shown us. The adoption of this, worldwide censorship-resistant network it's an astronomically large gain in 2017. You pulled value from 20 years in the future if you were long Bitcoin there. And of course, actually realizing that gain, selling it, and playing the market, that's a whole different thing. No advice there. No financial advice there. Just some charts. Got some people talking, sorry. I will get to you, SimGrade. All good on the account. Back to the grind. Sandro, thank you. Slavo Ukraine, all the best to you as well. Thank you. Thank you. Okay, so we went from pulling 12 years in the future. 2017, we pulled 20 years in the future. I don't know what could be more fantastic than that. 2021, all right, now let's look again. Let's catch it. Remember, we only hit it once here on February 8th, right? So we went 7,000. That's probably high, right? Because we only hit it once and maybe it's not great. Let's check another one that's kind of like high but not quite high. This one I like, 4,000. I think 4,000. There's a few at 4,000. Zoom in again. 4. Why can't I hit this one? 4. 3, 3.8, 4. Let's call it 4,000. All right. For this one, I know it's not, the red line is not 4,000. It's actually can be double that by 2021. So it's, again, I think a 9-month bar would be better than a year bar here. But the daily actual moves are hitting what the year is, but they're not only hitting what the year is. Again, they're pulling years ahead of that for what the daily should be. So let's call it 4,000 for 2021. 4,000 for 2021. Now let's move into the future. Now I'm looking at number one again. Number one, not number two, number three, but number one. Where is 4,000 in the future? 2044. 2044 minus 2021 is 23 years. So that still increases. The rate of increase is less, but it is interesting. And I'm thinking about other ways to draw these years and these bars to show you what we're pulling from the future. But again, flip the idea of hyper Bitcoinization on its head and look what we're already doing with these moves. Okay. This stuff was pulling 12 years from the future of what a traditional daily gain, traditional is not the right word, for what a modeled power curve proportional Bitcoin daily gain would be. Because remember, power curves are proportional to the network's growth over time. We pulled 12 years from the future here, 20 years here, 23 here. Okay. 4,000 here, 2044, 23. So as time went on in the Bitcoin network, we actually pulled even further into the future, although that seems to not be as wild an increase as it was, say, from here to here, 2013 to 2017, but it's still increasing. So who only knows, right? If let's just say the daily gain is 35,000, right? Yeah, 35,000 for the daily, which will be, I'm showing you the annual, would be 35,000 in October 2025. That means the power trend itself is $35,000 higher in October 2025 than it was in October 2024. When do we hit 35,000 on the daily? I think I'm off the chart, well off the chart. Yeah. Well off the chart. Could be 30 years in advance. I don't actually know. I got to model those things out, but this is how I would recommend you handle the Malox moments as we come into this bull, because it is extremely exciting, but it also is extremely, I'm trying to say that I think it's face ripping enough. Could be more. Could be the whole world collapses and we move into a Bitcoin standard. I don't see that. You're already pulling 20 years of value from the future on some of these daily gains. And then, yeah, you'll probably lose it the next day because it's going to go up 35,000 and fall 40,000 and then go up 20,000 the next day. But that's what I'm seeing. That's the name of the game with this and what I'm trying to explain with these changes. And then SimGrade here has the question, how do you see the diminishing supply side affecting in future volatility? Will it be more or less with a similarly less float, but with larger market cap? It's going to be more for the next two halvings at least. This goes back to the idea, I was talking about this in a prior video, but after two halvings, somewhere around 2035, we're getting to 50 trillion. All right, 50 trillion in value. Remember, the exponential is just crazy. I should take it off. I will. We're getting to 50 trillion after two full more halvings from now. Even on going on three halvings, I guess. We're getting to 50 trillion. 3 years later from that, you're at 100 trillion. 50 to 100. So after three halvings, we're at 100 trillion bucks. And I think at this point, it starts to become like real, like philosophical. Philosophical meets reality. And it's not going to start at that point. We're going to build up to it, but I think we're going to wake up one day and realize how denominated the world finally is in Bitcoin. People are thinking in sats. Someone mentioned, I think Kevin it was on the last video, where we could use the metric system of sats, millisats, megasats, kilosats, megasats, gigasats. And then we start repricing things. We start repricing things in Bitcoin. Things start to look different. How that looks from your perspective as a Bitcoin holder, do things look inflationary? Do they look deflationary? Um, it's harder to, obviously they're going to look deflationary, but if everybody starts to get on it and people start demanding returns in Bitcoin, and Bitcoin returns even start to be so predictable, I think things really change. I think they change in the bond markets. I think they change everywhere. So my answer to your question is more volatility until it changes, until the financial system changes. And I don't think we need to wait till 2050 or 2070 or 2100, when, unless we have some AI life extension technology, when most of us aren't here anymore. I think it's going to happen in the next 10 to 15 years. But more volatility until then, not less, more. I want to show you something on Ukraine. Again, the Ukrainians put this out, the Ukraine Ministry of Defense. But, oops, sorry, let me take this off now. The Ukraine Ministry of Defense, I'm highlighting down here. It's morbid. It's morbid to talk about losses. I would like Russia to stop having losses. They could just leave Ukraine, and then the world would be a more peaceful place. No one's threatening Moscow with anything, but Moscow is threatening Eastern Europe unjustly. So we do see that it's down. All right. So Trump really started his activities here. End of January, mid-February. I'll zoom in. You do see that this 30-day cumulative number falls. Okay, it has been falling from, say, 1,500 casualties that Russians are sustaining a day to 1,000, 1,100. Getting close to 1 million casualties cumulatively, according to the Ukrainians. But, here was the first phone call he publicly made. The pressure was up as Trump was in. The pressure was up, and then he made the phone call, and then maybe they were, acting like they were kind of going to do something. But, he said he was going to stop it on he was inaugurated here, right, January 20th. He said he was going to stop the war on day one. He didn't. We're over 100 days. He has not stopped the war. And I don't see this falling to zero anytime soon. I just don't see it. The Europeans are putting pressure on Russia. Asian nations and allies are putting pressure on Russia. Chinese is kind of neutral. China is kind of neutral at the moment. But Putin will not stop unless he is stopped. That's the bottom line. So, in my opinion, the way to stop is to continue to up the pressure, to up the support for Ukraine. They're not even asking for troops. They're just asking for weapons. That would stop him from invading. But all during this time, by the way, we hear Trump saying he thinks the war is going to end soon. He thinks we had a good call. He thinks there's some productive discussions here. If you follow Yulia Davis, Russian media monitor, you're going to see that it's disgusting to watch, but you can watch the Russian propaganda state channels, and they say, we're not stopping. We're going to march on Europe. We're going to nuke Europe. We're going to do this. Never again. No, yes, we can. Or yes, it's basically yes, we can is the Russian phrase that they respond to never again. This is very difficult. And again, going back to real world protecting your family, things are going to line up. In the fall, they have 200,000 troops in Belarus, Poland, the Baltics. NATO is going to respond in kind, have at least 100,000 troops on the other side of the border practicing, doing drills, doing military exercises. That's a flashpoint. See what happens. Again, I hope cooler heads prevail, but we're moving into just extremely dangerous times that as far as Bitcoin, if you're long Bitcoin and in a safe part of the world, I think you can probably sleep pretty well at night if you're on an island or in Madeira, Portugal, or something where a lot of Bitcoiners are. But around the world, it's very, very dangerous. So I see this danger continuing. I see it continuing. Here's another thing about the aid. I don't know how many Fox News hosts need to say it and drone on about Trump's lies that the U.S. spends more than Ukraine. This is just straight up aid. This is the Kiel Institute. The numbers are only updated since February. But Europe is now at about $137 billion. Billion euros. 137 billion euros. 114 billion euros for America. It's not anything like $300-400 billion worth of aid. Remember, 70% of U.S. aid goes to new kit for America, American jobs, American salaries. Everything stays in America. It's just old stuff is valued at this amount. And mind, this is like 20, 30-year-old kit, Bradley tanks and stuff that Ukraine is getting, probably overvalued at government valuations. So it's just nothing bad for America. And the actual money, the actual congressional bill, the spend, the allocation, that stays in America. That's how it works. Europe needs to do more. They need to do more, but they are above. They are above what the U.S. has done. Europe will continue to have to do more. Back at the beginning, when Ukraine was trying to stop soldiers, the aid per casualty was €1 million per casualty. Based on this is based on this cumulative figure, the red line, based on the red line. All right, when there was not as many casualties and also not as much aid contributed. As this war is grinded on, now the total aid per casualty is $250,000. And I don't know exactly the ins and outs of the Russian budget, but if you think it costs Ukraine in aid $250,000 per casualty, and you hear stories of Russians making probably something like $40,000, which is the equivalent to like $100,000 if you look at purchasing power in Russia. Just an enormous sum. Whether you call it 40,000, 100,000, whatever, they're prepared to do it. They're prepared to pay slaves to come invade a free Ukrainian society, to liberate a free Ukrainian society. They're paying slaves to do that. That's still a big delta, at least from Western aid to whatever the Russian cost is. I'm sure it's way less than that casualty. Even if it was 100,000, that's less than what it's costing Ukraine to defend their land. So heavy stuff, as far as I'm concerned. We have Bitcoin though. Bitcoin is an escape hatch, and like I said, it's going to start to be very exciting times because we're moving above the power trend here. This is market cap, not price. So market cap's a little bit under the power trend, but $2 trillion asset could be a $3 trillion, could be a $4 trillion asset by the end of the year. Think of the madness that's going to ensue, both in the media. You're going to have the Dems fighting World Liberty Financial and Trump coin and Melania coin and all the grift that's going to surround this. It's going to be mad. And like I said, if you base it on this metric, where we could see the daily actual equal the yearly trend price, you could be seeing $35,000 Bitcoin change in price in a day. So not just 3 or 4,000 or 2 or 3,000 like we had yesterday, going up to 108,000, but 35,000. Call it 30,000. This is how the math works. So we take comfort in the numbers. Quantitative stuff is actually quite clear, in my view. It's quite clear. If you look at the history here, no matter how you want to pontificate about Bitcoin and society and fractional reserve banking, the numbers are quite clear. This stuff is less clear. Russia is rearming. They're going to continue to rearm. 200,000 troops are going to do exercises, like I said, in Belarus in September. NATO is going to have to face that off. And it still costs Ukraine, and it actually costs them more, because remember, this is only an aid figure. This is what they're given. They have their own budget, which in truth, this is most of their budget. Probably they get money from private. This is just government sources, by the way. But bottom line, 250,000 euros. It's costing Ukraine to stop one Russian soldier at the moment. That's a cumulative figure. Russia's happy to spend $100,000 or less, which is a higher purchasing power for that soldier and their families to go to the front. I look at this picture and I do not see him stopping, even though it is down. 1,100 30-day average is down. I don't see it stopping. I see volatility. Volatility is not the right word here. I see the intensity keeping on unless Europe, and I think unfortunately at this point you just have to say Europe together with America choose to stand up against Putin's aggression. All of it though is going to pay for some heady numbers in the fall for Bitcoin. Feel free to donate to any Ukrainian charity. One I like it's a Lithuanian base, it's blue yellow. You can donate Bitcoin. But obviously watch Jake Bro. That's a great channel, and it'll take you, if you follow his channel and his links, you can find plenty of places to donate to Ukrainian causes. You can do it in Bitcoin. Anyway, I just have to say that because this is my part of the world, and although it's great to talk about heady Bitcoin prices and preparing yourself for more market turmoil, I don't see the actual physical conflicts ending anytime soon. And like I said, we've already seen the latest news about what's happening in Israel and Iran as well. Perhaps Israel's gearing up for their own face-off against Iran. So that's what I had today, guys. I don't know if you want me to look at any other charts, but I hope I got the point across. We have the valuations, we have the bands, we have the data. And like I said, we're already pulling from the future with these daily moves, okay? This was roughly 10 years, 12 years into the future. Here, we were pulling 20 years into the future. We could be pulling 25 years. I don't know what the number will be. I need to get a chart, but a 30, 35 grand change in the Bitcoin price, which could happen by the end of this year, start of next year, is over 20 years into the future. If you look at that number one, it's only 8,800 by 2050. So Bitcoin does give you that face-ripping volatility, gains, call it what you want to call it. Be careful. Leverage can fleece you of your entire stack. The old hodling meme, remember, that started from a Bitcoin talk post that was somewhere here. I think it was post 2013, maybe early 2014. It could have been end of 2013, actually. $800 Bitcoin, $1,000 Bitcoin. His advice was to hodl. Sound advice if you just wait a couple years. And really, throughout history, all you had to do was wait 4 years or less. 4 years or less. January 2014, when we get back up above, we're already above it in end of 2016. 3 full years. 3 years. Here. Max 4 years is all you have to wait, even if you buy the top. So that is my message. Be careful. Enjoy the volatility. If you feel like trading, go for it. But we have, if you turn these ideas about the world is just going to magically go onto Bitcoin, if you turn it on its head and you actually look at what happens here, it is some remarkable things. You're pulling 20 years ahead of trend on these daily price changes when the boom is in full swing. I got a couple minutes, but I don't see any questions, so let me know if you have any. Otherwise, I'm going to jump. I'll do one tomorrow as well, but Friday I will be out. Exciting times, guys. Exciting times. We're moving into these red line days. Withdrawal. In my opinion, withdrawal. You never know. You could see some hacks, some scams. Manage your keys. Hold your own coins. Run a node. That's the way to do Bitcoin. All right, guys. Thank you for watching. I will be back tomorrow with another. Have a good day.